Hey, welcome back. I'm David, and this is New Zealand Pension Plan, the channel where we cut through the confusion around NZ Super WINZ payments and everything that affects your retirement income. If you've ever looked at your bank account on payment day and thought, wait, that's not what I expected, this video is for you. Stay with me till the end, because I'm going to walk you through exactly why this happens, who it affects, and the simple steps you can take today to sort it out. No jargon, no scare tactics, just what you need to know, explained clearly. Let's start with the numbers because everything else we talk about today is built on this. As of the 1st of April 2026, the official fortnightly NZ super rate, after tax at the standard M tax code, looks like this. If you live alone or you live with a dependent child, you get $1,110.30 a fortnight. If you live with someone else, say a flatmate or another adult who isn't your partner, you get $1,024.90 a fortnight. And if you're part of a couple and you both qualify for NZ Super, you each get $854.08 a fortnight. These numbers come straight from Work and Income's official rates page, so if your payment is close to these figures, you're right on track. But if your payment is noticeably lower than these numbers, don't panic. And don't assume it's a mistake either. Let's go through exactly why this happens. The first and most common reason is your tax code. Now, if NZ Super is your only source of income, you're usually placed on the M tax code, and that's the rate I just gave you. But a lot of retirees these days still have some other income coming in. Maybe you're doing part-time work. Maybe you've got a rental property. Maybe you've got investment income, term deposits, or dividends. If that's the case, work and income or inland revenue may have you on a different tax code, an SSHST or SA. Each one of those pulls out more tax before the money reaches your account, which naturally means the amount that lands in your bank is smaller. This is not a punishment, and it's not unfair. It's just how the tax system is designed to work when you have more than one income stream. So the very first thing to check is, what tax code am I actually on right now? You can find this on your payment notice from Work and Income, or you can log in to my IR and check with Inland Revenue directly. If you're not sure whether you're on the right code for your situation, it only takes a phone call or a quick online check to confirm. The second reason is your living situation. This one catches a lot of people off guard because it can change quietly without anyone really noticing at first. The rate for someone living alone is higher than the rate for someone living with another adult. So, if your circumstances changed recently, maybe an adult child moved back in with you, maybe you took on a flatmate to help with the bills, maybe a friend or family member is now staying with you for more than 13 weeks in a 6-month period, Work and Income may reclassify your living situation and your rate adjusts accordingly. This is a completely legitimate calculation. It's not an error on their part, and it's not something sinister. But because it can happen automatically based on information they've received, it can catch people by surprise if they didn't realize a change in their household would affect their payment. So the second thing to check is, has anything changed at home recently? Even something that feels small, like a grown-up child moving back in for a while, can shift which rate applies to you. Now let's talk about the third reason, and this is honestly the one that surprises the most people and causes the most confusion and frustration. This is the overseas pension rule. If you or your partner receive or even just entitled to receive, whether you're claiming it or not, a state or government-funded pension from another country, like the UK state pension or the Australian age pension, then New Zealand applies what's called a direct deduction policy. Here's exactly how it works. Your NZ Super is reduced, dollar for dollar, by the gross amount of that overseas pension. So, as an example, if you're entitled to $200 a week from an overseas state pension, your NZ Super is reduced by that same $200 a week. And if that overseas pension happens to be larger than your NZ Super entitlement, you could end up receiving very little from NZ Super, or in some cases, nothing at all, while you still keep the full overseas pension amount. I know that sounds harsh, and for many retirees who spent years working and paying into a pension scheme overseas, it genuinely feels unfair. But it is real, official policy under Section 70 of the New Zealand Superannuation and Retirement Income Act. It is not a scam, it is not new for this year, and it is not something work and income invented to reduce what you're owed. It's the law as it currently stands. There is one important distinction I want you to remember here, because it changes everything. This deduction only applies to government-funded state pensions. If you have a private pension, an employer pension scheme, or personal retirement savings from overseas, none of that gets deducted from your NZ Super under this rule. It's still counted as taxable income, so it may affect your tax code as we talked about earlier, but it does not trigger the direct dollar-for-dollar reduction. So if you're watching this and thinking, I've got a workplace pension from when I lived in the UK, that's a different situation entirely from a state pension, and it's worth understanding which category yours falls into. And here's something else that catches couples specifically. If you have a partner and their overseas pension is larger than their own NZ Super entitlement, the extra leftover amount can actually reduce your payment too, even if you personally don't receive any overseas pension. This is one of the more contentious parts of the whole system, and it's something retiree advocacy groups have pushed back on publicly. But right now, it is how the policy operates, so it's important you understand it rather than be surprised by it. The fourth reason is simpler, but it's still worth mentioning because it's completely avoidable. Sometimes people forget to report a change to work and income, a change in income, a change in living situation, or a change in an overseas pension entitlement. And if that gets discovered later during a review or an audit, work and income doesn't just correct your payment going forward, they can also treat the difference as an overpayment and recover that money from your future payments. That means your payments could end up even lower for a period of time, simply to pay back money that was overpaid because a change wasn't reported in time. So the lesson here is straightforward. As soon as something in your life changes that could affect your entitlement, report it. It genuinely saves you stress and money down the line. Now let's turn all of this into something you can actually use today. Think of this as your personal checklist. Step 1. Compare your payment to the official rate for your exact living situation, whether that's living alone, sharing with another adult, or being part of a couple where one or both of you qualify. Step 2. Check your tax code. If you have any income at all beyond NZ Super, confirm with Inland Revenue that you're actually on the correct code for your situation. Step 3. Ask yourself honestly whether your living situation has changed recently. A new flatmate, a family member moving in, even a relationship change can all shift which rate applies to you. Step 4. Think carefully about any overseas pension, even one you're not actively claiming yet. If you're entitled to a state pension from another country, that needs to be declared to work and income, because if it comes to light later without having been declared, it can create real problems. And step 5, if you've gone through all of that and the gap still doesn't make sense, don't sit there guessing and don't assume the worst either. Call Work and Income directly on 0800-552-002 and ask for a formal review of your payment. You do have the right to request a review if you believe something isn't correct, and their staff can walk through the exact calculation with you over the phone. I also want to give you a quick warning sign to watch for. If your payment suddenly drops with no explanation, and you haven't received any letter notice or message from Work and Income about it, that is exactly the moment to pick up the phone and ask directly rather than waiting and hoping it sorts itself out or panicking and assuming you're being scammed. Communication is usually sent out when something changes on their end, so if you're genuinely confused and haven't heard anything, a direct call is always your best next step. One more thing worth mentioning, especially for anyone newer to the system, NZ super rates increase every year on the 1st of April, in line with changes in the average wage. So if you're comparing your payment to a figure you remember from last year, that's often the very first place a gap comes from, simply because the rates have moved. Always check the current rate for the current period, rather than relying on memory or an old figure you saw somewhere online. So let's bring this all together. There are really 4 common reasons your NZ Super might look lower than what you expected. Your tax code, based on whether you have other income. Your living situation, based on who you're currently living with. An overseas pension being deducted under the direct deduction policy if you or your partner are entitled to one. Or a reporting gap, where a change wasn't updated with work and income in time. In almost every single case, this is not a scam, and it is not a system error. It's the calculation working exactly as it's designed to. Once every part of your personal circumstances has been factored in, the best move every single time is the same. Compare your rate to the official work and income numbers for your exact situation. Think honestly about what's changed in your life recently, and if anything still doesn't add up after that, call Work and Income directly and ask for a review. That's it for today's video. I'm David, and this has been New Zealand Pension Plan, your place for clear, honest information about your pension and your payments. If this helped you understand your payment a little better, do give it a like, subscribe for more videos like this one, and drop a comment below if you've got a question about your own situation. I do read every one of them. Thanks so much for watching, and I'll see you in the next video.